Welcome to the Taxing Subjects Podcast. I'm Ryan Norton. Now, every 2 years, Drake Software surveys tax professionals to see if they've changed what they charge to prepare returns. And that results in the How Do Your Tax Prep Fees Stack Up series of infographics. In 2019, Drake surveyed 3,500 tax professionals, asking them to address a number of tax prep fee-related issues. How they charge for 1040 preparation services, whether hourly, by the form, etc. What types of payment they accepted, cash, check, credit card, refund settlement product, that kind of thing. And whether they required payment prior to filing a return, and how they planned to increase their fees next filing season, in this case for 2020. Now, respondents came from a wide variety of backgrounds. 37% were CPAs, 27% were EAs, just 2% were attorneys, and 34% of respondents did not hold a professional designation. And as for the type of market they served, we had 20% from rural, 43% served a suburban area, 36% a city or urban area, and less than 1% served out-of-country or military clients. And finally, we had an interesting mix of office sizes. 5% prepared between 0 and 20 returns, 26% prepared 21 to 100 returns, 47% 101 to 500 returns, and then 14% prepared 501 to 1,000, and just 8% prepared more than 1,000 returns in the previous filing season. For a little more context, this is the first time that Drake has conducted one of these surveys since the implementation of the Tax Cuts and Jobs Act. So it should be interesting to see if the tax overhaul legislation also affected tax prep fees. One of the best ways to find that out will be to go over those results, in this case of the 2019 How Do Your Tax Prep Fees Stack Up survey with a tax professional. And that's why we reached out to one of our frequent guests, Jim Lowe, EA, a 25-year veteran of the tax industry and owner of AVL Tax Professionals in Asheville, North Carolina. Welcome back to the show, Jim.
Thanks. Glad to be here.
One thing I want to ask you before we get into this would just be, could you talk about your tax practice? I know that you've done that before on your previous appearances on the podcast, but in case listeners did not hear you back then, and you should go check that out, could you just kind of go over your tax practice, what you do, the size, that sort of thing?
Sure. And I think that matters too when we talk about statistics, because when you've got so many different size and type offices, the answers to some of these questions are going to vary depending on your practice. But we have a family practice. It's my wife, daughter, and I. We predominantly do individual tax returns. And we do some corporate and partnership, probably about 10% or entity returns. And we fall into the 14% there, the 500 to 1,000 returns. So I wouldn't call us high volume, but we have a significant volume. And that will help kind of address my perspective of fees, which may be totally different for somebody that's doing a lot more returns or less returns, I would think. So, right. But I think there's value in just having the discussion. Absolutely.
Kind of helps you know also where you're at in the marketplace.
Sure.
And that sort of thing too, and maybe where the wind's blowing.
Exactly.
Well, let's just then jump into it. Our first official question about the How Do Your Tax Prep Fees Stack Up survey. And we're going to start with how tax professionals collected fees for their services during the tax year 2018 filing season. So this year, for the previous taxable year.
Tax year. Mm-hmm.
Right. It's a three-parter. One, how they charge for 1040 prep services. Two, what types of payment options they provided. And three, whether they required payment prior to filing a return. So the first of those then would be how preparers charged for their 1040 prep services. And the numbers we have are 18% charged by the hour, 44% charged by forms included on the return, 20% charged by categories they created, and then 18% use some other method. What changes, Jim, if any, should we expect to see in the way tax professionals charge for their services, especially in light of the Tax Cuts and Jobs Act making the standard deduction so attractive?
Sure. Well, a couple things. For instance, we charge by the form, and then also charge additional if there's a complicated matter.
Gotcha.
But I would just use QBI as an example. You know, you can't. It's hard to charge for a form for QBI. There are some new forms that are going to be out this year that we can actually attach a cost to, but there's a lot that goes behind that form, and I would say not one size fits all.
Right.
So we charge by the form, but we also have additional charges for additional time that it takes for us to prepare the return and do it accurately and with the knowledge that's needed.
What types of payment options do you provide? Now, just for listeners at home, this was a choose all that apply category for obvious reasons, because not all tax offices will accept all these things, but many will accept 2, maybe 3 different payment methods. 89% accepted cash, 97% let people pay with a check, 56%, so more than half, took credit and debit cards. Interestingly, 24% supported a digital payment service like PayPal or Apple Pay. And then 16% allow clients to pay with a refund settlement product, which is something we probably can talk about too, Jim. Those are interesting. But now those cash, check, and payment card responses, those seem pretty typical. Most people accept cash, and I would assume check. But that 1/4 of people accepted an electronic payment service seems like we're turning a corner, or there's something is shifting in how we accept payments. And I don't think that it's necessarily confined to the tax prep industry either. But I guess my question then is twofold. Do you think that we will see a number increase over the next 5 to 10 years for those electronic payment services, maybe edge closer to the credit card number, like maybe half of all tax offices accept digital payment services? And then the second part of that question would be, what do you make of that 16% supporting refund settlement products? And maybe when you get into the refund settlement products, explain for listeners what those are, just in case at their office maybe they don't offer them, they don't know what they are, that sort of thing. So where do you think we'll be with respect to digital payment? And then what do you think about that refund settlement product number?
Okay. I guess our office does all 5 of those. The 24%, the Apple, the PayPal, we use EPS through the Drake Document Manager, where we can send an electronic bill. We had never used that before until last year, and it was very convenient for us and for our client. Particularly if we're doing everything digital through the Secure File Pro, where we're encrypting everything and exchanging their tax return there. We just send the bill, they get it, they pay it, and it's done. So they don't have to call with a credit card. I can see that moving to be more frequent, even if they come in and pick up their return, but they still have to get their spouse's signature.
Right.
They can send that back, and we can send them the bill that way, and they can just pay it at home. So I see it moving that direction more, and it's convenient for us and for the client as well.
And those platforms are secure platforms too, so it's
Exactly.
I don't know that we would recommend people use email to exchange.
Exactly. Yes. Please don't send me your credit card information, although they do, and just don't.
They're not getting those IRS news releases.
No,
like
they
we
aren't.
Are.
They are not.
They should.
They really should. They really should. So, as far as the refund settlement products, I guess a little bit about my history. For the first 15 years, I managed a high volume, heavily refund settlement product driven business.
Okay.
And probably 80% of the returns we did had some type of a bank product attached, whether it was a refund anticipation loan or a refund transfer. So I've seen the value of those, and particularly back in the days when people could get their refund advanced to them, that's a real need for a lot of taxpayers. It's not something we offer at our office, but I understand the need for it. We've had, I would say, maybe 8% of our volume we use a settlement product, and that number has been declining. We've been open 8 years now. It's just declines every year. I think a lot of that is the type of client that had used that product is probably filing their own return now, and they really don't need help with their preparation.
Gotcha.
Or they don't think they do anyway.
Yeah.
So
Which is a different story entirely.
I don't see that product going away because a lot of people can't afford quality tax preparation service without having it taken from their refund. They just can't afford to pay for that service when the service is rendered. But I have to go back to the one question: do you require payment in advance? No, but we really should. We really should. We don't have a horrible collection problem, but it's just more keeping up. Oh, they said they'd send a check. Oh, they forgot. Whatever.
Well, speaking of that, actually, on that number, it was 48% wanted their money up front for services provided, and then 52%. So you're at least in the bigger bucket of people who do not require.
I guess so. I don't know if that makes me feel any better. But
So then my question would be about that. Why might a practice choose one over the other? And then do you think that requiring upfront payment might preclude other options that might be available to a practice to collect those fees, like, say, a refund settlement product?
I think it depends on the office and what people are typically used to. My guess is the prepayment is probably a more highly professional office. As far as expecting payment, I mean, part of it is what we do for a living. For instance, if you take your car to get it repaired and you go in and say, well, I need the keys, I forgot my checkbook, I forgot my credit card, they're like, I'm sorry, you don't get your car.
Yeah.
If somebody has already signed for the return, we're required to file that return. So it is a little bit different. But I think if an office is struggling with getting paid and their receivables start getting higher than normal, then I think they should look a little more seriously at the refund settlement products, just so they can be assured they're going to get paid. But you also keep in mind, if you don't know your client well enough, if their refund is offset, then you don't get paid. So, there's a lot of different angles to look at the same time.
So just then look at your situation.
Exactly.
And then move accordingly. Mm-hmm. Well, that's the 3-part question number 2. Let's move on to the third question. And we're going to look at tax professionals and how they adjust their services. We're going to look at whether tax professionals would adjust the fees for their services next filing season. And this one is particularly interesting. 4% said that they would increase fees by more than 10%. 51%, so more than half, said that they would increase fees by up to 10%. 44% said that they would not change their fees at all, and then less than 1% said that they would actually reduce their fees in the upcoming filing season, so in 2020. Since more than half said that they would either move up to 10 or above 10, so that'd be 55% in total if you take those two buckets together, which is, spoiler alert, that's basically what people's fees raised by over the past 2 years. And that's for Forms 1040, 1040s with a Schedule A, and then 1040s with a Schedule C. Other returns we'll get into a little bit later down the road in this podcast, but basically, over a 2-year period, it raised by 7 to 10%, and they're saying they want to raise rates by 10%. So maybe, what do you think about that? Why is it, are these fees going up again? And do you think it's because of the Tax Cuts and Jobs Act, or is it just like an adjustment for inflation? What do you think the reasons are for rates starting to go up again in the upcoming season?
I think there's a lot of reasons, and of course, the tax bill that passed is a big one. I know for us going into last year with all those changes, we didn't really do a whole lot with our pricing because we just didn't know what it was going to be like.
Right.
And so we will have an increase this year, I'm sure. When we're trying to evaluate these increases, I think we just have to step back probably to when the health care bill passed and how that slowly implemented into the tax return. And then we just keep compounding more due diligence for the tax professional,
Right.
which a self-prepared return, that person doesn't have to go through all that. You know, we added head of household last year. You start looking at the Form 8867 and compare it to 5 years ago, and you're like, how they even fit it on, the pages that they have. So I think a lot of the fee increase is catch up because we as a tax professional industry have continued to absorb, and somebody will say, well, your software does it. Well, the software calculates it, but we still have to understand what the software is doing. Mm-hmm. So I see that continuing to increase. The QBI alone, I mean, yes, the software is doing it, but you still have to make sure it's doing it right, that they qualify, all those kind of things. So I think that's probably, in my opinion, the reason you're seeing continual increases.
Right. Your software is not the thing that's liable for due diligence.
Exactly. Or understanding whether somebody qualifies for something or not.
Right.
It's not just clicking a box, obviously.
Yeah. Well, Jim, let's look at what professionals actually charge for the returns, and I kind of did spoil that a little bit in the last question with respect to the percentage increases. Mm-hmm. We didn't get into some of the more significant increases. But I just want the audience to remember that these numbers are averages derived from all responses. They are not broken down by professional designation, market location, that kind of thing. A basic Form 1040 was right around $159. That's a 7% increase over the previous 2 years. 1040s with a Schedule A were $210. That's a 10% increase. And then 1040s with a Schedule C were $297. That was an 8% increase. Now, the three types of returns that did see a very significant price increase, and there were several in this category as far as just the return types that we examined, but these are just the ones we're going to cover in the podcast. You can go download the full infographic to read the whole breakdown. But the first one was the Form 990 tax-exempt returns. Those saw a 66% increase this past year, $855. Form 1120S, the S corporation returns, those went up 50%. That's $623. And then finally, the 1120 corporation returns, C Corps, were 21% higher in 2019. So that was $719. Would you say then that those 10% increases for the basic 1040 returns over the 2-year period is a typical? I know you mentioned that we're always trying to catch up in the tax industry.
Yeah, and I do think some of it's inflationary also.
Okay. And then the next one would be, what do you think caused those statistically interesting jumps? You mentioned QBI. So do you think that stuff like that, these new deductions that maybe have more moving parts, are contributing to these more expensive prep costs?
I can't speak to the 990. I don't do 990s, and I do very few 1120s. But QBI is a big factor in the S corporation for certain. Mm-hmm. And the problem there, and the reason why I think we're seeing fee increases, is because we're always trying to explain to our clients, you've got to take reasonable salary. You have to take reasonable salary. Well, you don't get QBI on reasonable salary. So now all of a sudden, they're saying, I don't think my salary needs to be that high because I want to get that 20% QBI. Mm-hmm. And I think we're going to see more due diligence for tax professionals on the 1120S. There's so many of them there. That's a common tax structure for a small business. That would be my guess. Now the C corporation, the 1120, the only issue there that changed significantly was the tax rate structure itself.
Right.
So there could be a lot of trying to decide, do I want to be a C, do I want to be an S? Under this new paradigm, what really is the best structure for me? Mm-hmm. So that could be some of that increase as well.
Now, Jim, when it comes to local markets, now an interesting trend has kind of emerged. Suburban preparers, on average, either were charging on par with the city and urban counterparts, or they were a little bit more. Now, where they were more on the Schedule A was not quite as much. It was just a few dollars difference, like $3 when compared to city preparers. But they charged roughly $15 on average more for Schedule C returns. And as predicted, rural preparers tended to be the least expensive, and for obvious reasons. Mm-hmm. What do you think are some factors that could lead to like a suburban preparer charging more than a city preparer?
I just don't have a whole lot of experience knowing those different markets. A couple of things come to mind. In a suburban area, I think you're looking more at a probably a larger office that's drawing more clients. It'd be interesting if you could look at this and look at it with the volume of the office as well. But I think in a suburban area, you probably have a larger office with bringing more people. Mm-hmm. In a city or urban, it could be a smaller office. It could be somebody operating part-time out of their home where their overhead's not so high. So it's very difficult really to tell.
Yeah. If we look at the number of city urban, and we had 36% were city and urban, mm-hmm. and 43% were suburban. So like you say, within a city, you can have someone who has a super high volume, or they may be, like you say, just
exactly, because we don't know what the volume of those city, urban, or rural are as far as per office.
Down.
Exactly.
Yeah.
It's really hard to try to determine that. For instance, my family lives in Pennsylvania, small town, probably the size, about the size of Franklin. Mm-hmm. And so they're my family, so I do their return for free. But when we started, one of them sent a copy of their prior year return. They charged $60 for it. Well, I think the guy was just, working out of his house, and that's all he needed to charge. So it's just hard to tell. And of course, you never want to say just because you have a big office, you're more experienced, because the person that's working out of their home could be a lot more experienced than you. So it's just hard to tell.
And those are both markets that probably draw similar types of clients too, I would think.
Exactly. Yeah.
All right. Well, we won't keep you here forever, Jim. This is the last question.
The last one? Wow.
The very last one. Before we sign off, I just want to know about maybe the long-term structure of tax prep fees. Since you're the oracle on the mountain, Jim, I want to know.
The oracle.
We touched on it earlier. It's been a thread throughout the podcast, but the Tax Cuts and Jobs Act, it did make significant changes to itemized deductions, the standard deduction. Since more taxpayers now qualify for the standard deduction, and it is a pretty attractive deduction, how does that impact, or does it, paid tax return preparers? And do you think that more taxpayers will choose to file their own return in the next 5-10 years?
I think it depends on, of course, it depends on the office, and it depends on the clientele. And I think I maybe said this in the spring, but it remains to be seen for this year how that's going to affect our volume.
Right.
even though the year prior we kind of warned people that, next year you probably won't be able to itemize. The Schedule A business for us is not strong. We have a lot of clients that had filed Schedule A that won't anymore, but they have other things. They've got investments or rental property or all that. So I don't know how many of the Schedule A clients had not already moved to self-prep already. And I think that's going to take some time for it to all shuffle out, because really that was the only thing that kind of got removed was Schedule A and reimbursed expenses for employees. But what I do think is that the add-on service that we provide, whether it be tax planning, being available for questions during the year, certainly the tax bill did not make taxes more simple.
No.
Quite a bit more complex. So just being able to provide those services, and we didn't even touch on this, but the W-4 that just came out, we took a look at it, and I mean, that's going to be a big ruckus at the beginning of the year. It's going to require a lot of time. So even something that's supposed to be that simple that a taxpayer is supposed to complete, I'm not sure they're going to struggle with it, and employers are going to struggle with it. So there's always going to be that need for those types of things, even if Schedule A moves away. And again, it's not getting simpler. It'll just get more complicated, and that's job security for all of us.
Now, for those at home who do want a copy of the How Do Your Tax Prep Fees Stack Up infographic, it does break down along the lines of professional designation, market, state, those kinds of categories. So if you do want a copy of it, just go to drakesoftware.com/blog and click Downloads in the upper right-hand corner of the screen. You will have to fill out a short form, but once you do, you have access to all Drake Software downloads, like the Desk Reference Guide, the Drake Software Tax Year 2019 Desk Reference Guide, which is now available. Do you have your copy, Jim?
I don't.
Jim.
I'm waiting to go to the school and get a color one.
That's true. Mm-hmm. Another reason to go see us at those update schools. But if you do want it, just go to drakesoftware.com/blog, click Downloads, and you can scroll through. We have that one again, the Desk Reference Guide. We have the previous infographic that Jim joined us to discuss. How did your filing season go? And it goes back several years, so you can kind of see how stuff has progressed if you're so inclined. But that'll be it for today. Thanks for joining us again, Jim. It's a pleasure, as always, to have you on.
Glad to be here. Thanks.
That's it for today. We'll see you all on the next Taxing Subjects podcast.